Again, my name is Danny Fitzgerald. I'm the Regional Director for the San Diego Imperial Small Business Development Center Network. Of course, we're a small business assistance program funded by the U.S. Small Business Administration and the Governor's Office of Business and Economic Development. And this is our Connecting with Capital program. Today, as we wrap up 2020, and it's certainly been a year, we want to be able to look at try and have, see what 2021 is going to bring us in the world of lending, be able to talk a bit about that in terms of how our lenders are helping people to be able to pivot and to really also be able to come out of this and move forward. So we have a fantastic panel of different types of lenders, and so we're really going to have we have some traditional banks, we have some other different types of alternative lenders, as well as some nonprofit lenders that are here really to be able to kind of help folks out and kind of look at the ways in which we're doing. So again, thank everybody for coming on, and we'll go ahead and kind of go around and allow each of you first just to introduce yourself, your organization, and kind of what is the lending focus of your products. And we'll go ahead and why don't we start with you, Dan, and from Banner Bank.
Well, good morning, everyone. My name is Dan Newland. I am the branch manager of Banner Bank in El Cajon. The Banner Bank is a regional community bank. We're based out of California, Oregon, Washington, and Idaho. We've been in business for about 130 years. We support our local communities, small business owners. We also have a great consumer products as well to help support just our regular community folks. But that's us, Banner Bank here in San Diego.
Fantastic. And then why don't we have you, Tom, from Wells Fargo?
Hey, good morning, everyone. My name is Tom Becker. I'm a business development officer with Wells Fargo Business Banking. We offer many different types of lending products for businesses, everything from lines of credit to credit cards to SBA loans and commercial real estate loans. So we just have a wide depth of products that we offer to business owners.
Fantastic. And then what about you, Fred?
I'm Fred Crispin with United Midwest Savings Bank. The bank is actually headquartered in Columbus, Ohio. We're not a traditional bank. About the only thing we really do is make SBA loans on a nationwide basis. I manage the small loan division for the bank out of Panama City Beach, Florida, where we're making loans for startup and existing businesses under the SBA 7A program, $20,000 up to $150,000. For the most part, they're unsecured loans. We take a lien on business assets, but that's it. So for the most part, our loans are unsecured.
Fantastic. And what about you, Darius?
Yeah, good morning. Happy Friday. Darius Mahajer with Main Street Launch, Senior Vice President. Main Street Launch is a community development financial institution, nonprofit lending organization funded by the Small Business Administration, Department of Treasury, also various banks. We partner with various banks to fund and redeploy that capital to underserved communities throughout the state of California, whether it's because it's a startup business, lack of collateral, less than stellar credit, whatever the case may be, where you don't qualify for conventional finance. We try to come in and bridge that gap to a point where you do become bankable, and then you can take advantage of some of the your local more conventional lenders, primarily SBA lender. With COVID, we've partnered with a lot of cities and municipalities throughout the state to provide disaster relief capital and grant capital to businesses that have been shut down or impacted by COVID. Been around since 1979, focused on small business lending, just kind of in general. Glad to be here. Thank you.
Thanks, Darius. And what about you, Gochan? Tell us a little bit about your CDFI.
Yes, sure. Hi, everyone. This is Gökçen Tokbaş. I am a business advisor at International Rescue Committee. At International Rescue Committee, we have a CDFI, Center for Economic Opportunity. It is established due to the need of our clientele, actually IRC's clientele, who are mostly refugees, immigrants, low-income individuals. our CDFI is providing low amount loans based on the needs of each department. These can be personal loan, a credit building loan, business loan, auto loan, immigration loan, whatever their need. And the product is not just providing the loan, it's also providing the technical skills. So it is a partnership between IRC and CEO. As IRC employees, we are providing the technical assistance in financial literacy, business coaching, career development, immigration, and after they fulfill all the required trainings, and they will be eligible for the loans. Our loan amounts are pretty low comparing to the other places, but that's the product we are providing because we want to provide small amount loans with technical skills just to start up their adventure.
Fantastic. What about you, Ruben?
Hi, my name is Ruben Goldstein. I'm with a company called Bank of Cardiff. We are a small business lender. We do equipment, lines of credit, and capital. I think the best way to think about us is we slot below traditional banks. So we look at files that can't be bought by, say, the SBA and are, say, more high risk.
Fantastic. And we'll wrap up with you, Fernando, on this question.
Yeah, good morning. Fernando Ponce with Primary Funding. So Primary Funding, San Diego-based lender, community lender. We've been around for over 25 years. We fill a very specific niche. So we really are looking for companies that are in B2B industries with accounts receivable. And we're looking to leverage those accounts receivable and help you to speed up that the cash flow there by advancing on your AR. And then we'll also help you if you have purchase orders that you need to finance. So if you have POs outstanding, maybe you're procuring a product for the government or for, or for a private sector company, whatever that may be, and you need the cash up front, we can help with financing those POs. So B2B industry, if you have purchase orders or you have invoices, and that's where you're seeing your cash flow crunch, that's where we can be the most helpful.
Fantastic. And then kind of along those similar lines, just a simple, more descriptive question. Some of you answered aspects of this, but just the types of companies you work with, in terms of industry, times of business, et cetera. And, and so why don't we start with Fred, because I know his are really well defined. Fred, we got you. You're on mute. So the types of businesses you work with.
What was the question again? I apologize. I was reading an email.
No worries. So yeah, so we got you for the second question, the types of companies you work with, the industry, times of business, startup, et cetera. And I know you got that well defined.
Yeah, we're pretty wide open to all the SBA eligible businesses, with the exception right now during COVID, we're not looking at any food service, any fitness or entertainment type facilities. Outside of that, we're pretty wide open. Most of what we fund are service-based type businesses, whether they either work from home or from rental space. Because of the size of the loans, we're not real good lender for real estate in this small loan category. They'd be better off to go to their local bank and get a real estate loan, a lot cheaper than what it would end up costing to fund it through us.
Fantastic. And what about you, Dan, there at Banner Bank?
Yeah, so we do several industries. We have some that are more desirable than others. Certainly, to Fred's point, there are some industries that have been hit hard by COVID that we're looking at and scrutinize a little bit more heavy. Service industries, restaurants, those are harder to do. Travel, a little more difficult for us. But we like manufacturing, industrial, healthcare, veterinarian. Those are things that we like to do. But I wouldn't say there's anything necessarily more so than the other. But we are looking at the effects of COVID in some industries that has affected our ability to lend to those folks.
Fantastic. What about you, Fernando?
Yeah, so we are, again, we're focusing on B2B industries. So primarily companies that, are either wholesalers, manufacturers, service providers. Where we're not very good is on construction. So if you're a construction company, we're going to have a lot of difficulty with that because of the way you get paid and the bonding and progress payments, things like that. And then the other ones that we can have some trouble with are healthcare. Because we're financing accounts receivables, most of the time with healthcare, there are going to be issues with HIPAA, and we can't know who's getting paid and what have you, or what the service is that they're being paid for. So we have issues with healthcare and construction, but other than that, we're pretty agnostic. If you have AR, if you have POs, or even if you have some strong assets, and we'll take some real estate as collateral and give you some working capital or a line of credit, but it's all short-term stuff. So if you're looking for something over a year in term to repay us, typically not something we're going to look at. We want something that's under a year for the most part.
Fantastic. What about you, Darius?
Yeah, so with respect to industry, as an SBA preferred lender, we really kind of follow the guidelines of the Small Business Administration with respect to ineligible industry types. I'm not gonna list them all. You can do a quick Google search, but religious-based activity, gambling, things related to drugs, obviously, pyramid marketing, and so forth. Real estate development. These are all non-starters for us. We were very heavy in the startup world, financing almost 50% of our entire portfolios with startups. With COVID-19, we have taken a step back from pre-revenue startups, and we are focused on existing businesses who have been impacted the hardest. I think that covers it.
Fantastic. And what about you, Ruben?
I would say that we're a little bit different. Specifically, what I've been doing over the last few months is I've been taking a look at those troubled industries. So as crazy as it sounds, we're funding a tremendous amount of restaurants. We're funding a tremendous amount of construction companies. We're a bit of an oddball right now. The underwriters that we work with are willing to take that risk. So although I would say we are not specifically focused on any industry. I actually have a lot of relationships in the construction industry. We're seeing to do a tremendous amount of business right now that I understand that many lenders don't want to touch. So I would say that right now, if I looked at my current deal flow, probably 30 to 40% of this is food service. And I would say 50% of it is construction, home building, or remodeling. That's what we're doing a lot of right now.
Fantastic. And what about you, Tom?
We work at Wells Fargo, we work with a wide range of industries in both revenue size as well as industry, as we have many different segments of the bank. Myself as a business development officer, a large part of my role is helping the business owner navigate the bank and helping find the right spot in the bank to really place that deal to try to help the customer. From my stand personally, in my role within the bank, I'm typically working with business owners that have a few years in business and have sales revenue somewhere between 1 million and 10 million. But at the same time, by saying that, I'm also working with financing startups and business acquisition utilizing our SBA program. So there's really a wide range, wide range of offerings that we have within Wells Fargo, and just really trying to find the right spot within the bank for them.
Fantastic. And Gochan, you touched on this a bit with your first question, but what else would you like to add in terms of some of the types of businesses that IRC works with?
We don't have a specific industry that we focus. Actually, we focus to the clientele we have. So our goal is to help them to get a job through sole proprietorship or self-employment, or it might be supporting their business or workforce in anything. So it is mostly client focused, but I echo Darius, we cannot support any racist organization. Other than that, the industry is not our priority. We are just trying to help to support them with the barriers they are dealing with.
Fantastic. And so I think what, certainly with those first two questions, what we really want to show is the wide diversity of types of lenders that are available that work with small businesses. So if you're a small business that's had some challenges recently or in general, if you're a brand spanking new business as a startup, if you're looking to establish credit, or if you're looking for larger transactions, real estate, et cetera, there are tons and tons of different lenders. And at SBDC, that's why we have programs like this, why we exist, because we work with you to kind of help find the lender that works with you. And, and of course, all of these are fantastic lenders. Some of you did touch on, of course, with, some changes that are going on with COVID, because, it certainly has been our world. The last 9 months has impacted, literally every aspect, inch of our daily lives, and the impacts, of course, in the small business ecosystem has been enormous. And so, I did appreciate you all talking about that, but I think if we could, talk a bit more about some of the changes your company has implemented during COVID, and really in terms of not just the, in terms of both the products and the industries you work with, but also even just your business practices. And why don't we go ahead and start right now with, why don't we start with you, Dan?
Well, yeah, everything now is to the lens of COVID. I mean, it's really changed everything. I think all of our lives have been impacted by it. So, and in banking, it's no different. One thing that we really depend upon it a lot, at least at the retail side of the bank, is our digital systems. A lot of people are now able to bank remotely. Our business, we've been able to provide our business owners the ability to do more snapshot deposits, so there's less of a need to come into the bank to do their transactions. We have remote deposit capture as well, that they can do it from the comfort of their office or at home. So, we've had to pivot a little bit and to provide services to give the same access, but more virtually, so as to eliminate the need to going outside all the time. But yeah, everything we do is really had to be refocused around the pandemic, and we continue to evolve through it.
Fantastic. And Ruben, you touched a little bit about it, but what else could you add?
I think we've gone a little deeper in understanding what people need the money for and what the plan is. So we're less concentrated on, I like to say that right now, credit score is kind of meaningless. It doesn't, you can have a 700 in default and you can have a 610 and have a good plan. I think it reminds me kind of 2007, where credit score is very misleading. So we're taking a big focus on what business owners, many of our loans are unsecured in nature and we don't have an SBA guarantee. So we're really trying to see, like, what is the plan for someone's money and what's the idea behind it? We're also trying to, in terms of our side, mitigate risk by lowering terms. We used to do a lot of long-term unsecured financing. We're getting a little more comfortable with shorter term. And that's actually working for us and the customer, because then it defines we're just tightening the box, I guess is what I'd say. We really want to know what the money's being used for, what the plan is, and it helps us out.
Fantastic. What about you, Gochin? How are some of the changes been?
As you can imagine, our clientele is mostly low-income individuals or businesses, home-based business, sole proprietorship, food business, truck business. Unfortunately, with the COVID-19, immigrant community and low-income community impacted the most. So instead of providing loan, we try to create grant options for our clients. First, we started with providing grant, not much, but something that will help them. And then we created a resilience loan. The amounts are, as I said, they're small, but our focus is to gain more funding, partnering with different organizations so we can provide grants, because our clientele unfortunately couldn't access to some of the grants and capitals available for the other businesses, like these micro businesses. So that's our focus mostly.
Fantastic. And what about you, Fred?
Well, as probably 90% of the loans we fund every month are pure startups. SBA requires that we zero in on what's the borrower's business plan look like? How are they going to operate in a COVID environment with the restrictions that get placed on various industries? In a lot of industries, it really has had no effect. But there are industries, i.e. food service, fitness, that during shutdowns, it's had a very dramatic effect, or even when they weren't forced to shut down. Restaurants, as an example, in a lot of areas, the maximum capacity of 20-25% of the restaurant. How are you going to be able to survive in that environment? The ones that adapted and hooked up with the DoorDashes and those types of facilities seem to have done okay, especially for our existing client base. But we just put a halt on those kind of businesses for right now until we can get a grip. Hopefully, with the vaccine rolling out at the end of this month, first of next month, as we get into next year, as we get this thing conquered, hopefully we'll turn around and jump back into those industries because we've been a good supporter of those industries in the past.
Fantastic. What about you, Tom?
For us, we've been lending throughout the whole year, throughout COVID. I mean, from a lending standpoint, we are, asking a few more questions, and we have some questionnaires that we're asking and really diving into the interim financials for this year and kind of really understanding how the business was affected, either positively or negatively, or just are neutral in regards to COVID, and just really having a firm understanding of that so we can really communicate with our underwriters to really understand the requests and how we can try to assist during this time. Also, from a treasury standpoint and from a banking standpoint, very similar to what Dan had mentioned, we are receiving a lot more inquiries and a lot of conversations about more remote features from a banking standpoint and how we can assist minimizing business owners having to go into a branch to handle certain transactions. So we've been very active throughout COVID and really trying to help business owners.
Fantastic. What about you, Fernando?
Yeah, so our appetite for lending hasn't really changed much during COVID. I mean, we were never a good fit for, some of the heavier impacted industries like restaurants and, kind of B2C type of industries. So we've maintained pretty steady on that side of things. Where we have, I guess, changed our process is just the way we look at the deals now. We really dig in a little bit deeper from beginning to end, right? So really try to understand where you're sourcing product from, who that vendor is, what type of relationship you've had with them, how familiar are you with their process, and then all the way through, have you done business with this other company that's paying you on the other end, and what does that cycle look like, and are you pretty familiar with it, for one? And then the other piece of it is just as an operator, how confident, what kind of confidence do we have in the operator, right, in the owner, and how well do you know your business? That's where we're really focusing right now on making sure we understand, we have some confidence in you as a business owner, because at the end of the day, we do business with people, right? I mean, and so we want to make sure that we feel like the person knows their business, they have a strong understanding of what's going on, and if there are issues, they understand the issues and how they're going to mitigate them, not just like, oh, well, we hope it's going to get better, after COVID. Well, okay, if it doesn't, how are you mitigating those issues? So just understanding your business and how that looks. So our appetite hasn't changed, but what I have seen, we've just an increase because of what's going on. I mean, we've seen a huge increase in government, contracting, like procurement contractors have been a big one for us now. And then also, like frozen foods and food, things like that are huge right now. Everybody's buying that stuff and stocking up on that. So those are the kinds of companies that we're really seeing come to us now and say, hey, we need financing. We have these huge orders, we have these huge POs, these huge opportunities. Help us to take advantage of these, and that's where we've been seeing a big spike.
Fantastic. What about you, Darius?
Yeah, as I mentioned, we've pivoted quite a bit actually during COVID, just to account for what's going on in the environment and protect ourselves as well as our constituents. So as I mentioned, we're not focused on startups, any pre-revenue startups. That was a heavy focus for us pre-COVID. We are focused on businesses who are currently established and feeling the closures and the pandemic a little bit more. As you may know, Dan, I relocated down to San Diego to focus on veteran-owned businesses, which we've also kind of pivoted away from focusing on veterans to being more inclusive of everyone who's been impacted by the pandemic. And then thirdly, which I think is most significant, we were a very heavy driver of the SBA loan program, and we've since joined the California Rebuilding Fund, which is a program that's being launched pretty soon. We're testing everything and probably going live in January, which is bringing our loan program down from $250,000 to $100,000, holds an interest rate of 4.25% in terms of 3 to 5 years, as opposed to the SBA loan program, which is based off Wall Street Journal Prime and a longer term of 10 years. So we're just, we're doing what we can, and we're still trying to serve our mission, but we're reallocating some of our loan programs.
Fantastic. And so I think, some of you all talked a bit about this, and I want to kind of jump around a little bit in some of our questions, but I do want to really kind of look at now, in our all of our foggy crystal balls, as it were, in terms of what 2021 is going to bring. I mean, I think this year broke everybody's crystal ball. But certainly we're seeing some things, and I think, Fred certainly mentioned the hope that's out there with the vaccine. While it is obviously very bleak, I mean, here in California with the all the way to shutdowns, and I think that's even in most parts of the country. But what really we're looking at for 2021, and what kind of you all in terms of forecasting what that potentially could be in terms of going forward. And why don't we go ahead and start with you, Ruben?
So my belief is I think the vaccine will work. I think life will go on. However, I think we're starting to see, if I kind of take off my sales hat, I think we're starting to see severe dislocations in our economy. So the conversations that I'm having with my customers are things like inflation. If people here know that there's tons of liquidity in the market, it's not getting around to most businesses. Money velocity is at an all-time low. That will come back. So I think inflation is a huge concern. I think debt overhang is a huge concern. But these problems are actually opportunities. So the way that my customers look at this are what opportunities are going to come. I think business can be very different and very specific in nature. And by that, I mean, my standard customer, they'd call me and say, hey, Ruben, I need a piece of equipment, or I need 20 grand on a credit line. Let's get this done. Now that client saying, hey, Ruben, my competitor down the street is for sale at 50 cents on the dollar. Can I get $300,000 to do a cash offer? Unsecured. They're saying, hey, Ruben, my supplier is going to give me a 10% discount per month if I can pay off cash. Annualized, that's 120% off. So I think that my deal flow and for my customers is going to go to very specific needs because of all these dislocations in the economy, and they're great opportunities. These are positive things. So I think business will look much different, but also the opportunities are very reminiscent to me of 2011, 2012. There will be people that go out of business. There will be fire sales, but that presents traditional, tremendous opportunities. Where I fit in is getting those customers the capital to make those opportunities possible.
Fantastic. And what about you, Tom? What are you seeing?
I think very, very similar to what we've seen this year from our standpoint, since we've been, actively lending during this process, is I think we'll continue to dive into the financials, as business owners are filing their tax returns from 2020, continue to ask questions, really understand what happened during this year, as well as look into 2021 and really kind of understand what their, what's ahead for them, and really understanding the plan going forward. So from that standpoint, I'm very optimistic about this upcoming year.
What about you, Fernando?
Yeah, I wish I knew. Well, I mean, there's definitely going to be opportunities, right? I mean, we've seen it even through now, right? There's companies who figure out a way to pivot and have made a ton of money during this pandemic, right? And it's not always even in line with what they did originally. I mean, I've seen some pretty incredible, firsthand seen some incredible stories of companies that have been able to just completely 180 on what they're doing early on, and it worked, and they made a ton of money, and they were successful at it. But by that same, by that same kind of process, I've seen a bunch of them that have done it, that have pivoted, and they've failed at it, right? So, I mean, you tend to not hear a lot about those stories, right? You tend to only hear the ones where, like, well, this guy started doing this, and suddenly, he's doing $1 million a month here, but there's so many more that I've heard that have tried to do something and they fail, or it just doesn't work out, and they end up closing up shop. So, I mean, I think more than anything, be conservative in your approach, right? Because I've seen a lot of companies that have tried to do something, extreme, and they've either taken on a lot of high priced debt or gotten themselves in a situation where, they're like putting all their eggs in one basket, and suddenly they're like, hey, if I can just kind of bridge myself from here to this, I know I'm gonna kill it. I'm gonna be doing great. And then 2 months later, it's like, oh my God, now, what I thought was going to happen didn't happen. I gambled a little too much, and now I can't make payroll. I can't, I'm falling behind on this loan payment. I'm hearing that a lot right now. So, just do your homework. I mean, be conservative in your projections, and, think of what the worst case scenario is, because, that tends to happen a lot right now. Unfortunately, I'm trying to be the doom and gloom guy, but, if you do it right and you are conservative and you figure out a way to make it to that point, the companies that survive are going to be successful, because there's going to be lots of opportunities. It's just putting yourself in a situation to actually capitalize on those opportunities when you get there, because it's going to be rough. To Ruben's point, I mean, there's a lot of issues that are going to arise here over the next few months that we haven't even thought of right now, right? There's things that are going to come up. So I would say, be conservative for the most part, and try to figure out what the best path is for you. If you are going to gamble, what are those safeguards that you're going to have in place, so that you're successful if it does fail.
Awesome. What about you, Gochin? What are you kind of seeing in terms of things for 2021?
As I mentioned, our clientele is different. So we are mostly working with B2C businesses and lots of individuals, low-income individuals. So what we noticed that, as you may know, with the unemployment payment so far, 80% of the workforce was paid more than they were making before the pandemic. So I think it affected the economy. It helped for a while, because some industries like e-commerce, like online businesses, or some of the restaurant food businesses who could provide takeout, delivery, like who were able to use the digital platforms like Uber Eats, DoorDash, they were able to continue doing good business. But I am worried that from now on, since unemployment is not going down, so we will face with the negative effects of these unemployment issues. And I agree, I think all of us have to be more conservative, and the most important thing is being adaptable and try whatever works, and maybe pivoting to like improving the business skills they have is important. As Lander points, actually we are an organization that provides pure startup loans to micro businesses, no credit score requirements. So from that flexible approach, we turn to a very conservative approach too, because at this point, floating is more important than, starting the business. And I think getting as many technical advice or technical skills is very important. I think all businesses should invest themselves and gain different skills from different fundamentals of the businesses.
Well, that's fantastic. That's really good information. So what about you, Darius? What are you looking at for 2021?
Yeah, I wish I had the crystal ball, Dan. I'm cautiously optimistic. It's been a hell of a year. The CARES Act money, from an SBA lender's perspective, the CARES Act money really kind of stepped in and supported a lot of our clients. It made the payments for our clients for the last, 6 months or so, and I'm hoping that after the funds run out, these businesses are able to self-support themselves and continue repaying. But I've already been seeing some of the casualties as a result of the pandemic. I mean, mind you, we're headquartered in the Bay Area, and the Bay Area was one of the first to shut down and the last to reopen. So, with I think more than 30% of our portfolio is made up of food and beverage. So we're seeing quite a bit of impact. there are going to be casualties, but hence why we're pivoting into these various loan programs that are allowing us to, provide more flexible and direct capital to these businesses to let them weather the storm and get through this. Because I think, as Ruben mentioned, I mean, we will get through this. I don't know what, the new norm, or if there is going to be a new norm, is going to look like, but hopefully lenders continue following their mission, continue deploying capital, and continue serving these entrepreneurs.
Fantastic. What about you, Dan?
Yeah, so I mean, 2020 really kind of set the stage for what I think is going to happen in 2021. Although, like everyone's kind of agreeing, nobody truly knows what's going to happen. I think that there's definitely changes things we've never had to ask before, such as, is your business considered essential? We always consider all business to be essential, but now it's part of the process. Do we lend to someone that's not an essential business? Because that's obviously going to have an impact on the revenue flows. We're going to look over, we look at year-over-year growth. That could be potentially different because for a lot of folks, 2020 was a difficult year. So, we have to look at that differently. Also, I have concerns about real estate. Does real estate hold? We do a lot of commercial real estate lending, and, we don't know if that value is still going to be there in 2021. We don't know if we're going to have a return to where we were in 08, 09. I don't think so, but it's something that certainly we do look at. So it's going to be an interesting year. We've got, a vaccine. Does that help us? We don't know. But, I'm optimistic, but I agree, that also it's good to be conservative on some things as well, not getting too far in debt, not taking chances that maybe are not necessary.
And last, what about you, Fred?
Like everybody, I'm cautiously optimistic. I think 21 could be a good year as we get the vaccine rolled out and settle the ability to do a lot of things down, get back to a normal routine. But that's going to take, it's not an overnight deal. It's going to take May, June, July before we have enough effective vaccinations out there to open things up a little better. From a pipeline standpoint, we more than doubled our pipeline during the pandemic, which is a good thing for us. It required that we learn how to do some things more expeditiously, if you will, continuing to streamline, but that's all good. And I think will benefit us in the long run. So yeah, I think it'll be a good year.
Well, fantastic. So a lot of cautious optimism, as it were. And, and I think that's what's important is as we go through, I mean, one thing we've learned certainly through this is, I've heard the words adaptability, certainly looking at opportunities, looking at your business models. And, and at Sbdc, that's certainly what we're here to do. We're not obviously, the lender, but we're the business mentor, the business coach, and in being able to help everybody in terms of navigating some of that. So one thing I want to kind of move to now is just some tips that you could give to business owners as they're going into 2021 and they're looking at some of their lending options and things they should be thinking about. Why don't we go ahead and start with you, Darius?
Yeah, I've had quite a bit of conversations with folks looking for capital, and I guess the first one, and it's been touched on by all lenders here. There's kind of a new precedent for lending and what lenders are looking for. And when you're drafting up your business plan and you're pitching your model to lenders, talk about, the current state of affairs. So if you're an existing business, what were you doing pre-pandemic? What are you doing now, and how have you pivoted, and how do you plan to adjust for the pandemic? Because it's clearly the elephant in the room, or maybe it's not even an elephant in the room anymore. It's just what lenders are looking for. So definitely, target your pitch as it relates to the current state of affairs that we're in.
Fantastic. What about you, Tom?
Really, overall, just, when you're coming, just be very able to articulate, just as we were talking about, being able to really articulate how you're going to use the money, and how the business has been affected by COVID, and just really being able to have an open and candid conversation with us, because we're here to try to advocate for you. So just really help us understand what's really going on and really how that money is going to be used. I also think, working with an Sbdc advisor is a really good thing to do, because, when we're preparing the information and putting everything down, it's just a great resource to be able to really, talk through the different scenarios, and making sure that you're putting together everything to give you the greatest likelihood of being able to secure the capital that you're looking for.
Fantastic. What about you, Ruben?
So Fernando said something earlier where he said, everyone's a human being, they're a person, right? And I think kind of what's at least working in my side of the fence is, I don't like 1 million customers. I like a core group of customers that I can provide good customer service to and help them and navigate through these tough waters. So my advice to a customer is, be respectful of everyone's time, because you want them to be respectful of yours. Understand kind of what your high and low points are. Understand why you want money. Be realistic. I think in my range, like, some people say, hey, just get me as much money as you can. That's a bad idea. That's going to scare away lenders. Hey, I need 100,000. I need it for this, and this is what I plan to do with it. The more specific you can be with a lender, specifically, I believe an alternative lender, the more comfortable they're going to be giving you that money. Their goal is to be comfortable that you're going to pay the loan back. Banks do not want to repossess anyone. They don't want to sue anyone. So my specific advice for customers is, be as specific as humanly possible on what your plan for the money is and why you're going to pay the loan back.
Fantastic advice. What about you, Fred?
A ditto to what Ruben just said. Understand what you need, why you need it, and be able to express that to the lender. Be very conservative in your projections, given the current environment. And then once you start working with a lender, don't go out and do something stupid like buy a vehicle on a credit card, which can just really mess up your credit score quickly in the middle of a process. So those are the type of things I would tell borrowers, use some common sense.
Very good advice. What about you, Dan?
Yeah, I think to everyone's point, I think having realistic expectations is really key. I would advise anyone starting a business, have your own personal financial house in order. I think that's extremely important, that you're living within your means, that you've got credit scores that are good. Your credit's your best asset. If you have credit challenges, for traditional banking, it's very difficult to overcome that. So I think making sure you're financially on your own, your house is in order, like I said. I think it's important to also expect that, as a business owner, you're going to have some skin in the game. I don't think you're just going to come in there and expect a lot of money unsecured and not have really put much into it. So I think that you have to expect, I might have to put up some money. I might have to put up some real estate property, something like that. And if you don't kind of understand that, then maybe you shouldn't be starting the business, because you do have to do that. No bank's going to touch you unless you're willing to put something in yourself.
Fantastic. What about you, Gochin?
I echo everyone, but on top of that, I would agree with the financial literacy. Working on most of the lenders are moving away from the credit score, but credit history is still crucial. And in traditional banking, credit score is still the requirement. So working on your credit score, credit history, and knowing what will affect your credit history is important. And that's why we are providing small amount of loans, but we are trying to help clients to be ready for bigger amount loans. That's our product. Like with credit building loans, they're very small amounts, but it helps a lot significantly. And I mean, my situation is different. I'm an Sbdc advisor as well. So during the pandemic, all this process, we've been helping the clients to increase their credit score, so they will be eligible for higher amount of loans. So it is extremely important. And for the business plan, I would say from an impact lender perspective, I think having an engaging language is important, like talking about yourself as an individual, not just business, and sharing the skills and vision is also important too.
Fantastic. And what about you, Fernando?
Yeah, so I think, kind of to go back to it, knowing your business is really important right now. And something that goes along with that is just surrounding yourself with good advisors, people that are going to help you to understand your business, whether it be a good accountant, somebody at the Sbdc, obviously, that can help you understand and make sense of what you're actually doing. But then once you have those people helping you and advising you, work with a lender or work with the Sbdc to understand what is the actual type of loan product that you need, right? Because everybody, whenever somebody comes to me for a loan, it's always like, I need a line of credit. That's the first thing that everybody says. Everybody wants a line of credit. Maybe you need a line of credit. Maybe you don't. A lot of people get in trouble because they get a line of credit, they use it for the wrong thing, and then they're never able to pay it off. So understand what the loan product you need is for your business, and then pick the right lender that is the best fit for that particular product, right? Because every bank, every alternative lender, they all have their niches. They all have what they're good at. So by working with the Sbdc, for example, I mean, they have access to all these different lenders and they have experience working with all of them. So they can actually tell you with a lot more certainty than you trying to go out there and figure out who's the right one. Hey, you need this product, you need this amount, this is your experience, this is your type of business. These are the 2 or 3 lenders that I think are going to be the best fit for you, so that you actually have some success in getting this product, getting an approval for this loan. So those are the things I would say that you really want to focus on.
Fantastic. Really appreciate that. So, I mean, as you can tell, there are some great and wonderful tips that are out there and things you need to, things you can be thinking about. As we come into kind of our last question, which I'm going to ask everybody just as they just kind of tell again something more fun and positive, which is a success case that they've had, recently with the small business. And as we do that, I do want to thank our sponsors of our Connecting with Capital, which will continue in 2021 and having these conversations because they're so important. And, our sponsors for these are Home Street Bank, Main Street Launch, CDC Small Business Finance, Bartle Bridge Funding, and Primary Funding. And also want to make sure that each of you are able to, I see some of you have dropped it in your contact information in the chat box. But yeah, so as we'll go around and let each of you kind of tell us of a success story that you've had or a success case, during all of this. And why don't we go ahead and start with you, Tom?
Thanks. I had a client that I would really classify as a success story. It was a client that I was referred to by one of the Sbdc advisors. It was a franchise business that had started in 2001, but had some credit issues in 2008. But since 2008, they have really had great track record. They had great growth in the business. And what we were able to do is the client had, because of some of the credit issues in the past, had some issues securing a line of credit through a traditional bank. So really the client was very forthcoming with me when I met with them with an Sbdc advisor, really explained the situation, was able to articulate how this line of credit was going to help their business. And we were able to help them secure a line of credit. And I really classify it as a success, on this particular client. So.
Fantastic. What about you, Darius?
Yeah, I'd like to use the success story I've used previous webinars that Sean and I worked on together about 1.5 years, 2 years ago. The Bear Cave, 20+ year Navy SWIC, multiple deployments to Iraq and Afghanistan, came back, divorced, credit was shot, looking for some startup capital to open up his Krav Maga gym in Imperial Beach, and really just couldn't get it because credit was an issue, without getting into too much detail. But between the Sbdc and Main Street Launch, we put together a plan to kind of repair, create a plan to show that that the client was going to repair his credit how they were going to do that. And we were able to get them a $50,000 micro loan, open up the gym, and there you have it. So hats off to you guys.
Fantastic. What about you, Ruben?
I'll be pretty candid. I just had a customer that got referred to me. They were buying an $85,000 piece of equipment. They had the cash to do so, but they would lose all their cash by buying this equipment. They wanted a bit of a buffer zone. The guy has very bad credit. We got the approved for a form of bankruptcy. Got the guy approved for a $25,000. We got a guy approved for a $25,000 unsecured loan. Customer came back, said, "Hey, the rate's kind of high here. Can you help me out?" Said, "Hey, I can do $15,000 for you, but I got to put $5,000 of my money into this deal. Are you going to screw us? Are you going to default on us? Because if you do, I lose my money." He answered my questions. I funded the deal, made it happen. So, it's one of those things where when you're risking your own money to help someone out, it's my money. It's not it's my money. So those kind of conversations are happening on a repeated basis.
Fantastic. What about you, Gochin? I know you've helped lots of people.
I can mention one of our clients. We provided a bundle service. He's an immigrant. He came to our office to get a loan to start a business, but he had no idea about the credit scores, credit history, those kind of requirements. So we started with a credit building loan. We created a credit history, and he started having a credit score and increased it. And then he purchased a food truck. He became very successful, and then we helped him with a bigger loan, and he got the second food truck. And after this, he was able to make 6 figures, hire employees, and he didn't have to work as much as he used to, which was pretty much working at 3 different jobs to support his family. So it was a huge life-changing for him.
Awesome. What about you, Dan?
So I had a client referred to me earlier in the year from Axion. I think some of you probably know who Axion is. It was a client that really was starting a new business, and they needed about $50,000 of working capital to start up their medical consulting business. And typically we want to see about 2 years in business and financials, but there was some strong secondary income. There were assets, strong credit. And so, like I said, one of those cases we're actually able to do a startup. So it is possible to do that. And through the help of Axion and also through the counseling of Sbdc, we were able to make that happen.
Fantastic. What about you, Fred?
Yeah, ours are numerous. We're funding probably on average in excess of 70 loans a month with an average loan size of around 135,000 for basically service-based businesses for the most part. The medical group that was just mentioned, we've done those. Landscape guys, a lot of them are people that are leaving their current employment. They've got a good 401k sitting behind them. And we're funding them a startup loan. They're putting in their 10%. And as long as they've got at least 50,000 sitting in reserves, either in an IRA, 401k, we feel comfortable with helping that small business owner get started and get going. And so that's what we're doing.
Fantastic. That's awesome. And last but not least, what about you, Fernando?
Yeah, we had recently, I used to work at Chase Bank and had a client there that I was very familiar with for many years. She actually came to us, was an event planner and needed just some bridge financing to help her for a large job that she'd been doing for years now. But payments are slowing down right now. She wasn't going to get the money in time to make payroll, to pay her employees and pay her vendors. So we were able to come in and do that spot financing for her on that project, and just get her the cash up front. She made her payroll. Was very happy, and I think we'll be able to help her again when this project comes up next year. So that was a great one, and that was a quick one that we did. I mean, she came to us, I think on a Monday, and by the following Tuesday or Wednesday we had her funded. So we were able to turn that around really quick.
That's fantastic. So again, as we wrap up here, we're closing out 2020, And, it certainly has been a year. And, while we're looking at 2021, I think more than anything else, I think no matter what, there's a lot of lessons that have been learned. And I think both from small businesses as well as from lenders. And I think there's a lot of things that can come through and make us even stronger, make our small businesses stronger, and provide all sorts of new opportunities. So again, from the Small Business Development Center, I mean, we love to work with small businesses. We love to work with our lenders and provide that bridge between you and help connect you with the right lender, help you with the opportunities, and to be able to grow your business along the way, and really to be able to make sure 2021 is successful. So, as we wrap this series up for this year, certainly, like I said, it's going to continue. We'll have stuff in January, February, etc. We're rolling out our Meet the Lender series, which you'll see on our YouTube page, which will be a little bit smaller interviews with individual lenders, but really to continue to be that bridge to lending for the small business community. And so we wish you a fantastic close to the year, celebrating any holidays with your loved ones, and certainly a happy 2021. So thanks all.
Thank you for bringing this on, Dan.
Yes.